Focus. Ideate. Innovate. Enable.
Hello and welcome to another episode of NSE FinWiz powered by CNBC TV-18. Today we are at the headquarters of one of India's leading IT services company, HCL Technologies. Over the past decade, HCL Technologies has been one of the fastest growing technology companies in India and worldwide. Bringing IT and engineering services under one roof, the organization offers sustainable and innovation-driven business solutions to conglomerates through its unprecedented expertise and global strategies. Established for about a decade, HCL Technologies provides multi-service delivery in industries such as financial services, manufacturing, consumer services, public services and healthcare. Focusing on our theme for the series, NSE FinWiz visited HCL Technologies in Noida to gauge thoughts and notions of young professionals on investments and financial planning.
I have just started with my savings, so I'm just looking for good investment opportunities, and I just want to know, and then I'll invest.
So currently I'm not very extensively investing, but I do invest in gold as a commodity, and from next year I'm planning to go in stocks. For today's show, I would like to know a checklist. So whenever I'm investing in something, I would like if the experts could tell us that if you go through these 10 points, your investment is safe, or it's a difficult market, I understand, but still if we can get a checklist which assures us that this is done and then invest it.
I'm not very investment inclined as of now. If I do get 1 lakh rupees, I would maybe invest in a government bond or something at the top of my head, or get an FD. Simplest of the things.
If I get a chance to ask a financial expert, I would ask which mutual funds to invest in, to just find out what are the risks involved and the returns that I can expect.
We're now joined by our two very special experts. We have Mr. Anil Rego, who's the founder and CEO of Right Horizons, and we have Mr. Harshvardhan Roongta, who's a CFP at Roongta Securities. Gentlemen, thank you so much for being here. Before we start our Q&A, I just want to ask you guys here at HCL Technologies, when you think of investment, right, what is the first thing that you would look for in an investment? If I say it's time to invest, what's the first thing that you'd look from it? Returns. Sorry? Security, returns, risks, profit returns. Years of maturity, okay. Harsh, you had the question to ask.
Yeah, I just, we've heard returns has to be a unanimous purpose of investing. Okay. Somebody mentioned risk. You mentioned risk as well. You mentioned tenure. Okay, these are what you look from an investment. So we know one thing is that this is what we want out of investments. Now we possibly be talking about what are the avenues, what should you keep in mind. That's what we're going to do in the next couple of minutes. Now if I have to relate this to action, okay, now this is what we should do. I want to understand what have we done and how have we gone about doing it. Okay, so if somebody can just, if you would like to, or somebody would like to just say, what have you done till now? And how did you go about doing it? Like if you invested in a mutual fund, for instance, did you do a research or did you just go by advice on, from somebody? So I just want to know.
So let's make it easy. Let's say how many of you have actually invested in shares, directly shares? Okay, a couple. And any one of you who've invested in mutual funds? Okay, similar
in
amount.
Insurance, anybody's got insurance? Yes.
Not okay. What the company gives. I mean, alag se. Okay, great.
Fixed deposits.
Fixed deposits? RDs.
Okay, so why have we done this? We will possibly take it, sometime later. When you wanted to invest in mutual funds, okay, how did you go about it? Did you take somebody's advice? Did you consult somebody, or just went on, did your own research? What was action oriented? How did you go about doing it? So somebody may want to just answer that.
So we generally do primary research based on our understanding. So there are multiple portals available online, like moneycontrol.com. So what we can do is we can compare different mutual funds, and we can come to know that which one is better for according to our needs.
Okay.
Stocks, what about stocks? You are investing into stocks. So how do you do research onto stocks?
We look for their returns, I mean past returns of over 1 year, 2 year, 5 years, okay, and look at the company profile, and accordingly we invest, I invest in stocks.
Okay, and what about insurance? Most of you had insurances.
For me, I think it was more of reference, I would say. So what I did was that when I thought of doing some insurance policies, I had some of my references friends who had already done that. So I consulted with them and basically went to my banker and just had a quick discussion on this, and then he told me what all policies that are available, what are your short-term goals, what is your long-term goal, etc., etc. And then based on that, I think, and I believe that usually 70 to 80% people do that. I think only 30% is the lot who will go online and do search, because usually we don't have time for that. That's number one. Number two is that if you go to the portal online, then you don't understand what exactly they are showing up, right? So there might be some financial terms which is not, very much understandable by us, being very fresh into this type of investment. So I think for me it was more of reference, talking to friends and talking to my banker whom I trust upon, because when it comes to investment, it's more about trust rather than doing your personal research.
Okay, I'll tell you why I asked this question. The first action is what we're trying to correct. Okay, then possibly it will help you. Just in our professional careers, we've seen, some people come to us, say, Harsh, which is the best investment? Now that's a question. Now how am I supposed to answer that question? So it's what you ask is what you will also get. Why am I asking about this? This question to you is, you walk into a departmental store and you ask them, the person there, show me the best piece of clothing you have. So what are you likely to get in your hand? Whether you want a, you want a shirt, you want a trouser, you want a t-shirt. Within that, which colors do you want? So is the case with investing. You cannot make a simple question, saying which is the best investment. If you're talking to a friend of yours, if he's made an investment into a particular product, does not mean it will suit you, although he's your same age. So first action that you need to correct, what we've seen generally is, do not make such open-ended questions which are not, there is no generic answer in personal finance. That is why it is personal finance. Each individual has a different profile, and simply replicating somebody else's portfolio is not going to work for you.
So Anil, my first question to you now is, when we're talking personal finance, how do you avoid this copycat thing that, my friend has done this, so I should do that, or my neighbor or my relative has done this, so how do I not exactly copy him?
Yeah, I think the first is to try and understand yourself and your needs, and I think that's one of the key things to start off. And let me give you an example about myself. Okay, I had this goal of wanting to retire from corporate life by 35 years. Okay, and I think 50% of being able to do it was actually the fact that I set that goal. Okay, so I need to understand, okay, what are my priorities? The second is then go back to saying, what is the risk profile for me? Okay, can I take higher risk? Okay, I am young now, maybe I can take higher risk. I can take higher risk for this portion of my investments. Okay, so I understand my risk profile, and then I get back into the products after that. Again, one is to go by what your friends have said, but I think you need to do your own homework.
Harsh, let's talk mutual funds now. Now, mutual funds, some of the people here have invested, so they know mutual funds, they know equity, but some might again be a little confused on mutual funds. More importantly, there are multiple kinds of mutual funds. So how does one go about choosing that correct mutual fund?
There is a complete basket of opportunities available within the mutual fund space. So if I would call them asset management companies is a perfect word. That's what they are, AMCs. Basically, they manage assets. Now, how to go about choosing what to invest? Unfortunately, we've just seen that again, returns was the first thing that you want out of your investments. So the easy barometer is you look at returns.
Right.
Past returns, you've already looked at some funds. When you select funds online or any other source, you've looked at performance of the fund in the past. Does that in any form go to say that this is the performance you will get also in the future? You've in fact looked at something which has already happened. It's no guarantee that the same performance, the same fund manager, the same fund will actually give you the same performance in future. So if you're choosing and selecting a fund only basis of the performance it has given in the past, I don't think that is a way to go about it.
You're watching NSE FinWiz powered by CNBC TV-18. It's time for a very short break. Don't go anywhere. We'll be right back. Welcome back. You're watching NSE FinWiz powered by CNBC TV-18, and today we are at the headquarters of HCL Technologies. Anil, I want to talk now. Let's assume that somebody has invested in mutual funds by way of SIPs or directly also. But an important bit is also the right time to sell, because that is, you know, sometimes people get really emotional about something, or they're like, you know, I bought it, I have to keep it, or I've bought it and I just keep it and forget about it. So how does one judge the correct time to sell a product, a mutual fund?
I think in investing will be successful if you're able to overcome two emotions, fear and greed. Okay, the second one is, you know, we are talking about greed.
Yeah.
You know, when it's performing extremely well, you'll find all the advice, you know, coming that, you know, market is going to probably go a little higher.
Yeah.
You will also feel that, yeah, this is a wonderful fund I've invested, it's given me good returns, maybe I can wait for some more time. But I think that, you know, the success of your investment depends on when you're able to sell.
Right.
So again, if you are able to sell, you know, in a disciplined manner, I think that's going to be great. Can you take out some bit of your profits on a certain period of time? One simple way of doing it, again, coming back to disciplined investing, is having a fixed asset allocation. So if you say that, you know what, for me, I would like equities to be 60% of my overall portfolio, then whenever markets, you know, run ahead, I bring it back to 60%. Okay, and let's say returns are negative and they will probably come below 60%, then maybe I add some more money into equity. I think, you know, that type of strategy will actually do you very well.
Okay, great. Harsh, I want to talk to you about a financial advisor, because what we've also been speaking about, definitely having a financial advisor makes it a little easier, because he's like a coach, he's like a financial coach. But is a financial advisor extremely essential? Can I do without one?
If I were to develop a software, you know, you were into technology, so I ask you a question. If I was to make a software for some purpose, for some need of mine, am I going to be able to make it? There are some nuances which are, you know, which I'm supposed to have expertise about. I need to know. So if I am not going to be, I'm not capable or competent to make a software for myself. I am going to consult somebody.
Yes.
A company like HCL for that instance, depending on my requirement, and ask you to develop it for me. There is a reason I'm doing this. Similarly, if finance and managing money is not your expertise, please do not try and, you know, self-medicate.
Anil, I want to talk to you about real estate. Now, real estate, since we are in Noida, it's a hot topic here. We've had people earlier talking to us about their interest in real estate. If we are relatively new, we're getting into this investment cycle, how important is it to have real estate in our asset allocation, in our portfolio, and how can we start off in that?
Yeah, real estate definitely is something which you should have in a portfolio over a longer term. But you must also understand the asset class. Most of the time you need a reasonably large sum of money, right? You don't have REITs too much in India today. Okay, so I think it depends on
REITs?
Real Estate Investment Trust.
Right.
Okay, so where you can maybe put in a 10,000 rupees and it's invested into real estate in a diversified way like a mutual fund. So you don't have those structures in India yet today. So you have to, I think the first point is you need to keep in mind, when can I afford it? Okay, because sometimes I enter into an asset that to taking a loan and it becomes very risky, even though in itself it's a safe asset. Now if I lose my job, okay, today job security is not, you know, all that great. You cannot take it for granted, right? And so that is what I need to come back and look at. I need to see when I can actually afford it, and then it's a fantastic asset class. Again, can I look at it in different forms? Can I do something within my budget? Maybe I can buy a plot, for example, or I buy a smaller house. I may be a native of some other place. In my native, I may be able to buy it a little cheaper. So I can have it as part of my portfolio, at the same time not risking my portfolio, because sometimes by taking too much of an asset, I add risk.
People often say that, you know, I can take a loan on the house and then put the house on rent. So my loan amount, my EMI is kind of getting offset by the rent. Is that a good option at this? Let's talk for these guys at this stage in their career.
No, I wouldn't say that. One reason, because the returns that you get on renting property is maximum 3% on a residential. I'm not talking about commercial.
Yeah, right.
Residential is 3%, whereas the EMI on the loan is at about 8, 10, 12%. Now I'm talking about financial decision. If you already have a house, this second house, if it's treating as an investment, treat it like an absolute investment. Do not get swayed away by saying that's a property that I'm making. In India, we have the sense of pride when we say I have 2 flats. I have made a property for myself. But if it's your first property, you're excused. In the second property, you have to follow the rules of investing.
Okay.
If you do not follow those rules of investing, then is the time when you mentioned that, we've spoken about job security. What if you lose your job? What if you're incapacitated to work?
Yeah.
The company does not want to, leave you, but you've been incapacitated to work. Anything can happen.
True.
Who pays the EMI?
Yeah.
In case of equities, then you can obviously stop your SIPs, you can redeem, you can do anything else. In real estate, it's a very tricky investment.
After this short break, the audience asks their questions of the experts. Don't go anywhere. You're watching NSE FinWiz, powered by CNBC TV-18. Welcome back. You're watching NSE FinWiz, powered by CNBC TV-18. It's now time for the audience to ask their questions of our experts. So it's over to them now.
Sir, I have, I am going through a dilemma here. Yeah. So my portfolio manager says that you should invest in, portfolios which gives you long-term investments. And being a Gen Y, I believe in short-term investments where I need money or, liquidity in every 5 or 10 years. So what should I, what investment practice should I follow?
Yeah, unfortunately, equities, most people think equities, make you rich quick, okay, very rarely. For most people who go by that route, it'll probably make you lose quick, okay, because, you're trying to search for that return in very short periods of time. You may get it and then it gives you a high and you possibly lose all of it in the way down, okay. So, especially when you look at asset classes like equities, okay, I would suggest, look at a long term. On the short term side, again, there's no secret, portion of, get rich quick, okay. If I want stuff which is liquid, 4-5 years, 1 year, 2 years, then I need to use debt-like options. And what I would suggest for you is, say, let me keep part of it into short term. And this is for my Gen Y, okay, quick. And I keep some bit of it which is long term, and I think that will solve your problem.
Is it right time to invest in pension funds and health insurance? And if it is yes, then what factors we should look as of now, as today, that helps us to calculate what kind of returns we want after say 30 years or 25 years?
Very, very good question. The first is, should you invest into a pension fund? I would answer, if you should invest for pension. Whether in a pension fund or any other revenue is a different thing altogether. So retirement is one thing that is definitely going to happen, and you have to plan for it. So pension in that context is synonymous to retirement. Okay. Now how do you go about it? There are options available. Now you've identified that you have, say, probably 25 years to retire. Okay. So there is an investment which you need to make for 25 years. That's the first step. The second step is, you identify what is the kind of money that you require in the first year of your retirement. If you have a monthly expense of an X amount today, you inflate that, you consider inflation, and you calculate what is the amount you're going to require after 1 year of the first year of your retirement, after 25 years. Okay. Then you work backwards. If I have to accumulate a corpus which will give me this kind of money for my monthly expenses, what is the amount I need to invest from today? It's a simple three-step process. Calculators are available online. You can talk to your financial planner and he can do it with you. Okay, then you choose an asset class which will stay and is the best suited for 25 years from now. So that's how you go about it.
Thank you so much, gentlemen. Thank you so much for having us here. Thank you.
Yes, the event today was really nice, especially for the young investors like us, because we really don't know at this point of time what is the best medium to invest. And as the guest speakers were really, they had a lot of insight into financials. They told us about real estates, mutual funds, the risk involved, and also about a lot of contingencies, emergencies we should be planned with properly. Because as young people, we don't generally think of all these things which are going to happen in future. So even from that perspective, perspective was really insightful and really helpful.
Till now I've just been investing with references from my friends and colleagues, but it will now help me to invest with the help of my new financial advisor, which I'll go into, hopefully the new one that we've interacted with today.
I was only limiting myself to RD and FDs, but now after moving from this I will actually go to MFs, the mutual funds, the share markets, the real estate and all, so that will really help me in the future.
Well, that brings us to the end of another episode of NSE FinWiz powered by CNBC TV-18, and we hope that our experts have been able to guide the employees at HCL Technologies headquarters to plan a financially secure future for themselves. Until next time, many thanks for watching.